I'm Ritu. With me, as always, Mangalam, Maloo, and we're here on Mad About Markets. And today we're going to learn about industry.
Learn
About an industry, okay. Yeah, because, we've spoken about so many things, but this is one sector which has had a tumultuous 24 months that we haven't really touched upon.
Since you've said learn, let me guess, what could it be? Where do we learn? Schools, education, is that what you're talking about?
Mangalam, you already know it. Yes, EdTech. EdTech is on top of mind because the last 24 months, I mean, what a roller coaster ride it's been, right? First, the schools shut down and then you had classes going online, a lot of opportunity. The Chinese cracked down, a lot of money flowing into companies in India in the EdTech sector. M&A, global expansion and whatnot, and then of course
of course, schools reopened, everyone started going there, money which was coming in, the tap was shut tight.
Funding winter,
You had a lot of people lose their jobs.
Yeah, it's been tough and it's been a lot of learning for the EdTech sector as well, and that's what is on top of mind. That's what we discussed today on Mad About Markets.
That's what we do, and they say education is a great sector to also educate the investors on how to look at these businesses.
Well, so let's start by looking at it and then kick things off by taking a look at the total addressable market for India's EdTech industry. Now, in 2020, this market was $4 billion, but fast forward to 2 years, it's already at $6 billion. And come 2025, experts project that the market is going to reach an impressive $10.5 billion. Let's also take a closer look at the EdTech opportunity in India and do some number crunching like we always do. So in 2022, the EdTech market is estimated to be around $4.6 billion. And by 2030, it could skyrocket to a staggering $29 billion. That is the market size we're talking about, a compounded annual growth rate of more than 25% between now and 2030. That is what we call an opportunity worth exploring.
An opportunity indeed, and we're also, the largest population in the world right now, so a large part of this population needs to be educated. So from that 4.6 to 29, let's have that breakdown up for you itself, the segments that will contribute to the growth in the education sector. And this is according to a KPMG and Inc. 42 analysis. The K-12 segment, which is basically your schools from KG to 12 standard, which is currently about $2 billion, likely to go all the way up to $15 billion. Test prep from about $1.5 billion, go all the way up to $9 billion, growing at a staggering 29%. The fastest growing opportunity here is skill development, $0.3 billion to $2.5 billion over the next few years, growing at 30%. Online certification also growing at a strong 14% itself. So the total that Ritu spoke about, $4.6 billion, growing to $29 billion, of course, being led by the K-12 segment as its majority contributor, but the fastest growth coming in from skill development, Ritu.
That's the number we're talking about, $29 billion opportunity in the EdTech sector. But let's talk numbers because, it's not just about the size, it's also about how many users are actually willing to pay for it. A lot of us may still be using these solutions on YouTube for free, but how many are paying for it? 18.5 million paid users as of 2022, that's what we have. But come 2030, the sector is estimated to have 120 million paid users across your K-12 test prep, online certification and skill development. It's time for us to invite our guests. So we have with us Chaitanya Kalipatnapu, who's the co-founder of Emeritus and, unicorn in the EdTech sector. Saini, co-founder of Unacademy, another unicorn. And Prateek, Shukla, co-founder and CEO of Masai School. Gentlemen, thank you for your time here. And Chaitanya, I'm going to start with you because, the majority of your revenue still comes from outside of India. India's contribution is less than 25% for Emeritus. So I want to understand from you what the opportunity you see in the Indian EdTech space here versus, say, what you're seeing abroad.
Thank you for the opportunity. Just in terms of, say, Emeritus playground, India is 25% of our revenue, but at the same time, it's the fastest growing business unit that we have at Emeritus. But if I take a step back, the opportunity for us is upskilling and reskilling with high quality education. We see that opportunity as global, number one. And with the tailwinds that we had post pandemic, we are extremely excited with what the growth prospects that India has. And I think that's what we are leveraging. And as we go ahead, we would tend to see that India contributing to 33-35% of our overall revenue.
All right. And Roman, what would you say the top 2-3 challenges are for EdTech today? Because it's been a tumultuous ride, as we pointed out earlier.
See, a lot of EdTechs, including us, we grew and we spent a lot of money, and there was no focus on EBITDA, etc. So the first challenge, Unacademy has done really well in it. Like we are on our journey to become profitable, but a lot of people are still like trying to wrap their head around it, like how to generate an EBITDA. Then second is like moving very, very fast. You yourself told that offline are opening up, hybrid is needed, then ChatGPT is coming, then a lot of regional players are there. So this is not some traditional sector where what you are doing today or after 1 year or 2 years, that will continue to happen. Like you need to crack YouTube, you need to crack offline, you need to crack AI and so on. So you need to be very, very adaptable, very, very maneuverable.
Chaitanya, but let me come back to you on the competition in the sector, because, you know, we have more than 4,500 edtechs on one hand. These are the young companies. Then you have the established players, plus you have your offline players like B schools that have learned the tricks of the game, and they're also present online. So at the regional level, with the unorganized sector and with the established players, how do you compete at each level?
If we just look at say higher education, just the degree education, you're very well aware that the gross enrollment ratio in India of people getting into undergrad education is like 27%, right? Which is 40 million people doing that. And for us to even go towards the trajectory of what China, USA have done, which is towards a gross enrollment ratio of 60%, that means we are talking about at least another 20 to 40 million people being able to access undergrad, postgrad education over the next 5 years or a decade. And there is no one single player who can cater to this. It needs a much wider contribution from both brick and mortar universities, from universities going online, or players like us in terms of making offerings accessible, high quality offerings accessible to people who would want to pursue higher education. So in that sense, I see that the headroom, there's a huge headroom here. It's not that one player takes it all, but at the same time, considering the addressable market that's out there, which is exciting and growing, we see the prospects to be extremely bright.
All right, and Roman, talking about Unacademy, your mainstay is test prep. As we were speaking about that, it's likely to be one of the fastest growing subsegments, way over the average 25% plus that we're talking about. In your business and in your experience, what's the kind of growth that you guys are targeting after the tough year that it has had? Do you think it's likely to recover and grow at the rate that the street is expecting?
Yeah, so we will grow around 25 to 30% this year. Like last year, we did around like 1,000 crores in revenue. This year, like we should do around like 25 to 30% growth on that.
All right, gentlemen, just hang in there. Usually when we speak about the edtech space and the education space, we think of young guys in their t-shirts and jeans, software coders and all of that and stuff. The new age players, basically. But you know what? Education has been a bastion of all the traditional players. And we've had a list of listed companies in this space as well. The two that come to my mind immediately are NIIT and Navneet Education. And that's perhaps because they've also created wealth for shareholders. But the others, case in point, Z-Learn, Treehouse, Vedanta, CL Educate, S-Chance, all of them have been classic cases of wealth destruction for investors. We know how these deals or supposed deals went as well. A lot of them taking a lot of debt, not being able to service it, not seeing the kind of growth that they promised to investors. We've had a bunch of them, Everon Edu, Educom Solutions, a lot of deals which didn't fructify, like MT Educare and stuff as well. But that's from the listed space. Let's talk about the startup space as well. There have been more than 4,500 of startups. Until the beginning of the pandemic, there was just one unicorn in the edtech space, and that was Byju's. But thereafter, a lot of education went digital, a lot of funding started coming here, and we've had nearly 6 additions to the Unicorn Club. So total 7 unicorns in the edtech space. The 6 additions were the likes of Vedantu, Physicswala, Unacademy, you had Upgrad, Eruditus. All of them, as of the last funding valuation, are still unicorns. Let's see what happens the next time.
We'll see what happens in the next time. But, there's been a flurry of activity in the sector because investors always sense the opportunity, and a lot of M&A opportunity as well, because companies are growing and expanding beyond the Indian borders as well. So from before the pandemic in 2019, we saw 6 M&A deals in the sector. That grew to as many as 13 by 2020. As of 2021, there were 31 deals, and last year alone, there were 33 deals that took place. This year, we've already seen the likes of Physicswala, for instance, announce a bunch of acquisitions. So the momentum is continuing.
The momentum is continuing, but let's see whether the magnitude continues or not. Because from 6 to 33 last year, that was quite telling. But we're not sure whether it becomes 6 or 7 or 8 in the next year.
Well, we'll see by the end of the year where that stands. But let's also talk about the kind of funding and investor interest this sector has seen, because up until 2019, in the pre-COVID period, This sector saw $1.6 billion of funding across 307 deals, with a handful of mega deals as well, and one unicorn that was created. But cut to 2020, and that is when the funding boom really began. So EdTech companies broke all records in terms of fundraising in these years. As schools and colleges, moved online, COVID took hold. Investors pumped in billions of dollars in the sector with deals of more than $6 billion between 20 and 2021, with 10 mega deals and 4 unicorns created. But with the COVID effect now wearing off and the funding winter kicking in last year, funding in the startups had fallen to $2.4 billion from 2022 until April this year, which is less than half of what we saw in the previous year. So the funding boom and then sort of, slow down that we're now starting to see in the EdTech sector.
And it was so rapid, right? 1.6 turning into $6 billion in the next couple of years and then falling to $2.4 billion.
In fact, it's been the worst affected sector when it comes to funding winter, but take it across all startups.
And the financials also tell the story. If you just take a look at the financials of these companies, the aggregate revenue of unicorns and soonicorns, the ones which are soon going to be unicorns, increased by 91% year on year in FY22, owing to the strong post-pandemic impact. But at the same time, their expenses also more than doubled in FY22 and were much higher than their earnings. Picture this, in FY22, to earn 1 rupee, unicorns and soonicorns spent 3.6 rupees amid a pandemic-induced aggression to go ahead and acquire market share. Most valued Indian edtechs continued to burn heavily in FY22 as well, and the aggregate loss of unicorns and soonicorns increased by 89% amid continuous focus on growth and customer acquisition. In fact, they chased growth at the cost of profitability. The only outlier in this space is PhysicsWallah, which entered the $1 billion club in 2022 and has been profitable since its inception in 2020 itself. So, they grew, but at what cost? At the cost of huge losses. And understandable that when the funding winter comes, they will run away from companies which are loss-making.
The kind of pressure that these companies have seen from investors. In fact, we have some of these companies that are actually, very much unicorns still. Chaitanya, let me come back to you. At Emeritus, for instance, profitability remains elusive. The customer acquisition cost, like Mangalam was just pointing out, is very high. 3 rupees spent to earn a single rupee. Why is that the case? Why does profitability remain elusive, and what's the solution?
For Emeritus, we have never, our acquisition cost has always been much below what we try to take as a fees, or what's the willingness to pay from a learner or a customer. But it's true that the profitability has been elusive, and there are various reasons. But from our own journey for the past 13 years, there is a stage at which there is funding that's available. You take the funding, and the metric that we were going after is about growing revenue. By growing revenue, we mean to say, how do we work with multiple universities across geographies, and how do you create that collaboration? How do you create portfolios with these universities in terms of ensuring we have multiple offerings? And then finally, how do you grow? So if we think of our journey as 3 phases, one is in terms of signing a partner or working with a university. That's our model. Second is that how do you grow the portfolio with that particular university? And the third phase is how do you optimize the portfolio, which is where the aspect of profitability comes in. So in our journey, I'm pretty happy to share that we are in this phase in terms of the metric that we are tracking in terms of going forward is profitability, or it's going to be profitability.
I think it's time for some tough questions here. Only one among the so many unicorns and soonicorns that we speak about are profitable, and you yourself are making losses. Just wanted to understand, what is so challenging about this industry?
The challenges, I would be able to speak about the challenges that job tech industries in general is facing. The first is about the intent of the user, those who are coming on the platform. How relevancy is going to play an important role in terms of the intent of our user, those who are coming. I think that's one very important thing. Second important thing is, with the changes that are happening around us, adapting your course curriculum and adapting as per the need of the industry, and then generating the outcomes at scale is again the second biggest challenge that most of the companies in job tech have faced. And third very important thing, which is around the infrastructure that every user who are learning completely remotely from their hometown, the infrastructure challenges that they are facing, how can any education institute solve that? I think these are the three fundamental biggest challenges that job tech industry faced in the past as well as is currently facing right now, and will keep on facing as long, like till the time things around us is going to basically change at a rapid speed.
Yeah. Well, gentlemen, hold your thoughts, because speaking of challenges, in this tough macro environment with the funding winter and whatnot and the mounting losses and profitability, like you were saying, remaining elusive, many edtechs are shifting their focus on capital efficiency and cost cutting. And what happens when they start to cut costs? 19 edtech startups, including 5 of the 7 edtech unicorns we've been speaking about, have laid off almost 10,000 employees since the start of 2022. 2 out of every 5 layoffs in the Indian startup ecosystem, in fact, was from an edtech company. Sample this, for instance. Byju's has laid off more than 5,000 employees just very recently, another 1,000. Unacademy, over 2,000. You have Vedantu with more than 1,100 that have lost their jobs. Apart from these, Lead has laid off 160, while Emeritus, which is now Emeritus, gave out pink slips to around 40 employees. So it's been a harsh environment, and employees have faced the worst of it.
It has been, and it's so sad that all the clients of these companies actually learn from them to get some jobs, and these companies in turn have to cut jobs of the people who work in those companies itself.
Yeah, and cutting jobs is one thing. You had entire companies that did not survive. Not only did they lay off a host of employees, many edtechs were also forced to shut shop altogether. So, had startups like Lido Learning, like Crejo Fun, Uday, Superlearn. These guys had to shut operations for good in 2022 amid the funding winter.
Well, let's put this question then straight to Roman. Roman, Unacademy itself had to let go of 2,000 plus people, close verticals, make some tough choices. I mean, what's been the lesson here?
See, biggest lesson is that you need to keep profitability in mind. At the end of the day, businesses are there to generate cash, and that is the focus of every single business, including Unacademy. So right now we are growing frugally. We don't spend too much. We try to see ROI of every single project. The gatekeepers are very tight. The finance team is very tight around every single approval, every single proposal. But at the same time, we are also promoting new experiments like Next Level, Graphy, etc. So it's not like we have completely stopped doing new experiments, just focusing on core. So it has to be run in a very tight knit ship. Just see if the thing is needed or not. Like every single employee, every single team member at Unacademy needs to have that mindset that at the end of the day, if I am spending 1 rupee, am I getting more than that or not?
And Prateek, what about you? I mean, earlier it was growth at the cost of profitability. Now going forward, is it going to be profitability at the cost of growth?
Okay, so I think the next leg of growth in terms of the entire industry, specifically in the job tech space, is going to basically be getting more and more deeper into the tier 2, tier 3, tier 4 cities and villages of our country. And basically, one thing that we have realized is that with the advent, this entire decade is going to belong to tech or tech related jobs, and everyone, be it domain specific companies, be it tech companies, everyone is going to be focusing on building the tech powerhouse in their own organization. So I think this is a beautiful time for anyone to basically start their career, and I think the next big opportunities for any company who is starting up in this space is going to be going deeper into going deeper into tier 2, tier 3, tier 4 cities. Second, I think work from home for tech workforce is going to be going to play an important role, because people are not going to migrate to the larger cities.
Right, on that note, let's take a short break. On the other side, we discuss the yays and the mays, which is the growth drivers and the headwinds for the edtech sector.
And as always, we're going to ask the bigger question, and the question is, what is going to enable India's edtech industry to excel in the future? That after we return.